Hello everyone, it is Friday, June 6. Today we're taking a closer look at the euro and the British pound charts to assess potential market movements. Both the euro and the British pound strengthening against the US dollar yesterday, supported by relatively upbeat economic data out of Germany and Italy. Germany's construction PMI posted a notable gain in April, while Italy saw a strong rise in retail sales. In the UK, the construction PMI came in above expectations, prompting increased demand for risky assets and waning on the dollar in the first half of the trading session. Meanwhile, the Eurozone Producer Price Index dropped sharply by 2.2%, clearing the way for the European Central Bank to cut its main refinancing rate to 2.15% and the deposit rate to 2%. Despite the rate cut, the euro advanced pioneered by ECB President Christine Lagarde's forward guidance. Lagarde signaled that the regulator is likely to hold rates steady at the July meeting, citing policymakers' satisfaction with current inflation levels. Uncertainty surrounding US trade policy also played a role. President Donald Trump's tariff measures could reignite inflationary pressures, and with little progress in negotiations between the US and EU ahead of the July 9 deadline, the ECB opted to pause its easing cycle after 8 consecutive rate cuts. As a result, the euro gained ground following Lagarde's statement. However, the rally was short-lived, as profit-taking led to a modest bearish correction. Even so, the euro managed to reach a new one-week high, which was enough to keep the bullish sentiment alive, at least for now. Now, let's take a look at today's macroeconomic calendar, which is packed with key data releases likely to drive highlighted market volatility. In the first half of the session, traders will be watching Germany's trade balance and industrial production data. The latter is expected to show a 0.9% decline for April. France is also set to publish similar figures, which could influence euro sentiment. Later in the day, attention will shift to the Eurozone, where the third estimate of first quarter GDP growth is due. The bloc's economy is projected to have expanded by 0.3%. If this figure is confirmed, focus will quickly move to US non-farm payrolls, the highlight of the day. Consensus focus suggests the US non-farm payrolls rose by 126,000 in May. However, after this week's disappointing ADP private employment data, markets are bracing for a potential downside surprise. In comparison, payrolls stood at 185,000 in March and 177,000 in April. A weaker than expected May reading could trigger a sharp sell-off in the dollar, giving the euro and British pound room to climb. The US unemployment rate will also be closely watched. It is forecast to remain steady at 4.2%. In terms of secondary indicators, markets will also receive data on average hourly earnings and consumer credit change, though the primary focus will undoubtedly be on non-farm payrolls. Turning to technical analysis, the 1-hour EUR USD chart indicates that a decline followed by a false breakout at 1.1407 would generate a buy signal, with the euro potentially rebounded to 1.1453. If US data disappoints, a break above 1453 would support adding to long positions, targeting further upside toward 1490 and possibly 1.1530. Around 1.1530, I recommend considering short positions on the rebound, aiming for a 25-30 pip correction. Short positions at 1.1490 and 1453 should also be considered on the false breakout. Conversely, if strong US data points to a resilient labor market despite Trump's tariff policy, A break below 1407 could send the pair down to 1361 with a more extended move toward 1314. At this level, it would be wise to go long, aiming for a 3540 pip intraday correction. Going long at 1.1361 and 1.1407 would only be relevant following a false breakout. Speaking of the British pound, the setup is the same. Sterling has reached a new one-week high, and its bullish momentum appears to be fading, so it's best not to rush into long position just yet. With only the UK house price index on the calendar today, a false breakout at 1.3544 would generate a sell signal, potentially pushing the pair down to 3502 and possibly as low as 3473. Around 1.3473, traders are advised to go long on a rebound, targeting a 25-30 pip intraday move. Long positions at 3502 should only be considered following a false breakout. If the pound climbs during the first half of the session, sellers are likely to step around 35.81 or 36.13. False breakouts at these levels will trigger a bad sell signal. In the event of disappointing US data, sterling could push higher to 1.3659 or even 36.83. At 36.83, short positions on the rebound would be advisable, targeting a 25-30 pip correction. Going short at 36.59 and 36.13 should only be considered and a false breakout is confirmed. Good luck to all and have a nice weekend.